Alright, welcome to this new video. In this video, we're going to talk about the next day model. And credits to this model to the MMXM trader. Please check out his account, he shares amazing value. And this model helped me to become very profitable. It is an intraday model where you cannot go lower than the 15-minute. And it will help blur out the noise. And I'm very sure it's going to give amazing value to you. So without further ado, let's dive in. Just like any other entry model, your entry model needs to have some rules. And let's go over the rules one by one. First of all, you need to skip Mondays. Why you need to skip Mondays? It's because if you have a weekly candle, and for example, you expect a bearish week. If you've seen the open, high, low, close video on this channel, you know what I'm talking about. If you're expecting a bearish week, your Monday is probably going to be the accumulation phase of the A and D or the power of 3 of the week. So skip Mondays. Secondly, focus on New York AM only. And why is that? We want to focus on, if you have the accumulation, manipulation, distribution in mind, just as we saw on the weekly profile, Monday accumulation, Tuesday manipulation, and the rest of the week distribution, you want to trade the distribution leg of the weekly candle, because that move will give the most clean price action. And just like on the weekly candle, also the daily candles works the same. Asia accumulation, London manipulation, New York distribution. So you want to focus on New York AM only because that will give you distribution leg of the daily candle. Important rule, only execute on the 15-minute and you cannot drop below it. So no 5-minute, no 1-minute, just 15-minute. And why is that? It's because the 15-minute will blur out the lower time frame noise. You've already seen the video about the difference between a pullback and a reversal. And most of the time that trap will happen on the lower time frames. On the 15 minutes, you won't have that very often. So it will blur out the noise. Next rule, use the economic calendar as your roadmap. And that means look at the higher impact news reports, so the red folders of Forex Factory, because those red folders will give you the volatility injection, the volume, and you want to catch those moves inside the intraday basis. The next rule is that you should trade after your anticipated higher time frame level is hit. So for example, this is a weekly candle, and here's your higher time frame premium array. You should trade the day after that higher time frame level is hit. And we're going to the charts in a second, where I will show you some examples about this. And your target should be 1 to 2. 1 to 2 is enough to replace your 9 to 5, to compound your personal account, and to make lots of money in the market. Don't trust the gurus who tell you that you only need a 1 to 8, 1 to 20. That's not true. 1 to 2 will let you catch those A+ setups over time and let you compound for the best results and the highest win rate. Now let's dive into the charts and check out some examples. This first example, we're going over NASDAQ on a daily time frame. On the weekly profile, you have your classic AMD, accumulation on Monday, manipulation, distribution higher, and the weekly objective was the all-time high right here. You see price goes above it, but it fails to displace above the high. So next day, you anticipate that it move higher, taking out previous day's high, but we're expecting a move lower, so previous day's low. So when we drop to the hourly, you see price reach the high at 11 a.m. on Thursday, probably high of the week, and then we displace lower. And the next day, on Friday, this is where you want to execute. So on Friday, you see a move above midnight open, taking liquidity into this bearish breaker and also the wick of this bearish order block. And now let's dive into the 15 minutes to look for an entry. So on the 15 minutes, we have these pre-London highs getting swept at New York. Look at the time, it's 9 a.m. Then we displace lower, creating this fair value gap. And the buyers are respecting the fair value gap. It also trades into this order block and this bearish breaker, and then it displays lower. So your setup could be here. And after that, we displace lower, leaving another fair value gap, and also an entry point could be here. To draw on liquidity, and draw on liquidity could be a fair value gap right here. Why would price trade to exactly this fair value gap? Do premium and discount. This was the first fair value gap you encountered inside this kind of the range. So to come back to our rulebook, we need to skip Mondays. This is a Friday trade. We focus on New York AM only. These two entry setups are in New York. See the time? It's 10:30 here. You only execute on the 15-minute. Trade the day after your anticipated higher time frame level is hit. The higher time frame level was hit at Thursday, the all-time high sweep. And then we trade on Friday. So that's also good. And the target 1 to 2. So if you would have had trade right here. And your drawn liquidity was this fair value gap. Stop loss above here, but if you need to 1 to 2, was right here. And the other trade was 1 to 2 like this. In this next example, we're looking at GU at the daily chart. See this price action. We took the high here. This plays lower. Price respected this inverse fair value gap, then went lower and creating this daily SIBI right here. If you have few week, Monday, Tuesday manipulation, and then expansion higher into this daily fair value gap. And which you see, price touched this fair value gap, but it closes below here. So that means the next day, we're going to look at lower prices. So this move happened at Thursday, New York AM. So that means our potential trade is going to be on Friday, New York AM. So let's move forward to there. So what do we see here on this Friday? We have this 50-minute fair value gap. We have this order block, and price trades end of London, trades towards here. And we are expecting lower prices. Why? Because the daily candle failed to displace higher, so we're expecting lower prices. And lower prices will be into a fair value gap that's in discount or into these failure swings, these lows. So let's see what we got into New York. We got a sweep of the highs here. Still inside this fair value gap. You want the bodies to see that holding. So we got a sweep of liquidity here. And then prices trades lower toward the drawn liquidity. In this next example, we're looking at AUD/USD at the daily chart. And price trades on Wednesday into an order block and fair value gap. And then the candle closed above it. So the next day, our drawn liquidity are both this daily SIBI and also these two failure swings. And eventually these highs. That said, let's drop down to the 1 hour. We see that price trades to this daily fair value gap and order block on Wednesday. So our trade ID is going to be a Thursday, the next day at New York. And price trades in London back to the order block, and the bullish are respecting that. So now let's go to the 50-minute to see if we can find an entry. Here at the 50-minute, there's a clear depiction. You see there's an inversion fair value gap right here, pre-New York. And inside New York, we have displacement upwards. Coming back into this fair value gap, stings one point in it, displays away, then it comes back. This newly created fair value gap, what's exactly at the OTE range of this swing low to this swing high, and then it displays upwards. So to summarize, you want to wait on a higher time frame before a higher time frame premium array is met. You wait for price to react from that array, and the next day, that is your execution day. So for example, if on Thursday your high time frame array is met, and you see price reacting from that array, then on the next day, on Friday, you're going to use the next day model. So you're going to look at the 1 hour, the 50-minute, and your execution should be on the 15-minute, not lower. But also on the 1 hour, also on the 4 hour, but not lower than the 15-minute. You want to ideally sell above the midnight open to catch that classic AMD, and your entry should be in a premium array on the lower time frames. Thank you for watching this video. And this video, you learned a new entry model you can use to frame high probability trades around. It will give you a nice framework. So please remember, wait for the higher time frame array to be reacted from. Then on the next day, it's execution day. Then you drop to the 50-minute to look for your entry models where you sell above the midnight open or you buy below the midnight open. If you like this kind of videos, please like and subscribe, share it with all your trading friends, and I'll see you in the next one.